Hello there. I was reading a tax textbook today because, it's Friday and it's 5 o'clock somewhere. And I was reading about shareholder benefits, and this is generally not an overly exciting topic, believe it or not. But this one was about the guy who either currently runs or used to run Cirque du Soleil, and he went to space. He was like one of the first customers, I guess, to go to space. Um, and he decided he was going to try and put it through Cirque du Soleil's books. I'm telling you the name of this because it's public knowledge. This is not like I'm somehow ruining his confidentiality. No, this is public because it went to court. In 2020, I want to believe. This happened this year, actually. So the guy goes to space, and then he televises this thing as like a charity thing and says that it's for the promotion of the company, that the whole thing is a publicity stunt. And the CRA was like, no. So the guy took them to court. And the CRA is basically saying that, like, you didn't promote your company. You wanted to go before you had any idea that you were going to promote this company. Like, it was a personal idea that you wanted to go. And like, NASA didn't allow any commercial promotion. So even if he wanted to promote the company, he couldn't do it. And they didn't even know it was going to be a charity thing until like a couple days before he even left. Like, definitely not when he signed the agreement. And the company didn't even actually pay for it. His like family trust paid for it, and the company paid the trust back, or like, oh no, the company family trust paid for the insurance or something like that. Anyways, big mess. The CRA was like, you definitely can't deduct a trip to space through Cirque du Soleil's books, like unrelated. And so they ruled that Tax Court of Canada ruled $41 million, 90% of that taxable benefit to the shareholder. 90%, which is actually pretty generous. Like, I, in my opinion, would have thought 100% would have been a taxable benefit, but they allowed 10% of this cost to be put through the company. And what that means, this shareholder benefit piece, this 90%, double taxation, actually in this case it's closer to triple taxation, I think. Oh no, not this one. Next one was triple. I'll tell you about this next one. So double taxation of this, because the company doesn't get to deduct it because it's not a business expense, but you as a shareholder have to take it into income, so you get taxed personally, which is the double taxation piece, because you get taxed on it on the corporate side and then also on the personal side. So that's no good. Okay, there's this next one. This guy, he was an owner-managed company, I think much smaller than Cirque du Soleil, because the numbers here are much smaller, like thousands and hundreds of dollars, not millions of dollars. And he's paying out bonuses to friends and family and like his kids. At one point, he pays a bonus to his spouse, his ex-spouse, instead of paying spousal support. That was the worst one. And he's basically just paying salaries to everybody. And then he took a trip to Hawaii and was like, no, it's for business because I have to like be happy to do my job. And the CRA was like, like, no. So basically, taxpayer loses. They threw all of this out for the most part. They conceded that there were business-related expenses on a cruise because he did presentations or something, and the CRA conceded that piece, so they let him have that one. But this guy had triple taxation on the spousal support payments because not only all of this was triple taxation because it wasn't deductible for the company, so it was taxed there. He had to take it into income because it was a shareholder benefit, so he's taxed there. And the CRA was like, you knew what you were doing, so we're going to hit you with gross negligence penalties, which is 50% of the tax owing on both the personal and the corporate side. So it's a significant amount of tax owed by this guy, just for paying out salaries and stuff to his like friends and family, which like he shouldn't have been doing. The spousal support one gets me though, because he literally could have just taken that money as a salary for himself, totally legally, then paid the spousal support out to his ex, and he would have been able to deduct that on his taxes. Like that would have been totally legal, and he would have ended up in the same position as if he had been allowed to deduct it through the company. That one blew my mind. Like, how hard is it for the company to pay you and then you to pay your spouse, ex-spouse? Why did it have to come out of the company's bank account? Anyways, definitely hope that guy learned his lesson with the old triple taxation there. There's more, like this kind of thing goes on. And I see a lot of clients who they will try and put things through, or they'll send me a receipt and they'll be like, this is definitely for business. And I'm like, please help me understand how this is for your business. But really what happens, and I think in most of these cases, like the guy with the spousal support, he knew what he was doing. That is like clearly written. He knew what he was doing in terms of like trying to avoid the tax on that. The Cirque du Soleil guy actually tried to take a small piece of it into his income because he was trying to avoid the CRA. Did not work. But I think in the majority of these cases, what happens is that it's just really unclear to the small business owner what they can deduct and what they can't. And so they put through receipts, or they try to deduct things thinking like, yeah, this is definitely for the business. And then the CRA comes back and says, actually, it's not. And then you have to take that into your income and double taxation. And that's what I was getting at with my clients too, is they just don't know. And so when they put something through, there's a really good communication tool for us to talk about why it's not deductible, or for them to explain why in fact it is deductible. Because, you know, sometimes it is. Sometimes on the face of it, it looks like it shouldn't be. But sometimes companies get to deduct some weird stuff depending on what they're doing. My partner, Ryan, as you know, is a magician. He gets to deduct stuff that most people can't, just by the nature of creating magic tricks. I have a client who trains dogs for her company, and so she's able to deduct the dog treats that she needs for that. So it really depends on the kind of business that you have and whether or not the expense really is for business, but it's worth it not to try and push the boundaries on this one, not to try and put something through that's like, I took my family to Hawaii and called it an annual general meeting. Like, no, that's probably not going to fly. If you have questions about this, about what might be a shareholder benefit, definitely throw them in the comments. I'm happy to do my best to answer them. These questions are usually tricky for somebody like me to answer on a platform like this because I don't have all the information. But if you have a general question, I'm happy to try and answer that for you. If you have any great stories that you want to let me know, I love this kind of thing, obviously, because I was reading about it on Friday night. What were you doing tonight? I hope it was the same. I hope you're doing well. I hope you're not falling asleep reading tax textbooks. I'll see you tomorrow.